Hi, I'm Shaun Osborne, Chief Currency Strategist at Scotiabank. The third quarter has just closed out, and market returns for the quarter overall highlight just how defensive investors have become since the summer. Gold and the US dollar both outperformed stocks and bonds between the end of June and the end of September. Trade tensions, political risks such as Brexit and developments in Washington, as well as growing concerns that the global economy is heading for a more marked slowdown, have driven investors towards safe havens in the past few months. Our colleagues at Scotiabank Economics have tried to quantify the impact of uncertainty on the US dollar. Their work concludes that the US dollar is currently some 11% above its fundamental level, primarily because President Trump's trade and economic policies have created uncertainty among investors, which has raised demand for safe US assets, lifting the US dollar. Added to these developments has been a heightened demand for US dollar liquidity over month and quarter end through late September. The tightness in short-term US dollar funding has been compounded by the impact of the Fed reducing the size of its balance sheet as it moves to normalize monetary policy. Demand for US dollars typically does strengthen late in the year. A seasonal bid for the US dollar versus the major currencies has been evident in market trends for a number of years, but the phenomenon seems to have been amplified since the financial crisis. Since 2008, the US dollar has risen strongly and consistently in October and November. The US dollar has appreciated in 8 of the last 10 Novembers, delivering an average return of 1.5%, the best month of the year for the US dollar overall. October and November combined produced the best 2-month run for the US dollar on average for the calendar year. The precise reason for the spike in the dollar late in the year is not exactly clear. Broadly, the move may reflect a repricing of dollars among investors as they adjust to better US economic data. Another notable seasonal phenomenon of the past few years has been the tendency for US data reports to beat market expectations in the latter part of the year after serial disappointments in the first half of the year. Scotiabank is forecasting a year-end rate for dollar Canada of 1.30. We remain reluctant to embrace a bullish view of the US dollar as US growth slows and structural imbalances rise. But broader market uncertainties and the tightness in US dollar funding markets suggest there is some upside risk to our forecast into year-end. You can find more thought-leading content from Scotiabank on our website, and you can also follow us on Twitter as well as LinkedIn. I'm Shaun Osborne. Thanks for watching.